Let us illustrate the concept of the accounting equation. If I would like to build a house worth 15 million and I only have 10 million as my own money, can I build the house? Yes, I can build the house by securing 5 million from other sources. And in this case, I would like to get the 5 million from the bank. I will secure a loan from the bank. So now, with a 5 million loan and with my 10 million money, I can now start building a house worth 15 million. So if the house is completed, then I will have an asset of 15 million, worth 15 million. And then now in the loan, the general term for the loan is liabilities, and the appropriate term for my own money is net worth. So class, basically this is the concept of the accounting equation. Assets equals liabilities plus net worth. Okay? In this topic, class, make sure that you will remember that the concept of accounting equation is the relationship of assets, which is on the left side, with liabilities and net worth on the right side. So the accounting equation wherein liabilities and net worth on the right side define how the assets were funded or who has claim on the assets. So in this case, my claim on the asset is only 10 million because 5 million is the claim of the bank. Okay, it's the amount of claim of the bank. Okay, because they are the one who funded 5 million. Okay, class? That is now the concept of the accounting equation. In this class, I would like to discuss to you this word, SAL-N. What is SAL-N? Well, probably you have not noticed it, but you have been hearing this several times, okay? SAL-N means Statement of Assets, Liabilities, and Net Worth. In the Philippines, public officials are required to file a SAL-N. SAL-N is the listing of their assets and how the assets were funded. Were the assets funded from a loan or from their own personal money? Okay? So, SAL-N is required when they will take office, and after 1 year, they need to file again another SAL-N, and after 1 year, after a year, they have to file again. It is required because it will be reviewed whether their SAL-N is more or less realistic in terms of the source of their revenue. For example, if they have a huge increase on the SAL-N of the first year of office, then it is highly questionable. If they, for example, their net worth is only 10 million, then after 1 year of office, the net worth now is 50 million and there are no liabilities, and their source of revenue is only, or source of income is only from their salary, which is 2 million per year. So that will be highly questionable. Okay? So that's the reason why public officials are required to file SAL-N, the Statement of Assets, Liabilities, and Net Worth. So typically, SAL-N applies to individual. Okay? Let's move on, class. Class, let us recall our accounting equation, which is assets equals liabilities plus net worth. Okay? And how about in business? What's the difference of the accounting equation of an individual with business? Actually, there is no difference, except that the business use equity instead of net worth. So, in business, we are using the accounting equation assets equals liabilities plus equity. Okay? So, how can we illustrate that? If we are going to put up a business, in this case, let us start a business. And our business is refreshing water station. Okay? So I have to put first my capital, okay? And I would like to put cash of 500,000 in the business. So this is my capital. So this is my own money that I will put in the business. So my 500,000 will now become the money of refreshing water station. It will no longer be mine, okay? It will be the money of the business. So in this case, I will no longer allowed to use the 500,000. It is the business money, no longer mine. That's following the concept of the separate and distinct personality of the generally accepted accounting principles that you have learned in Module 1. Okay? Suppose that the 500,000 is not enough. I will still need a vehicle. Okay? So I have a second-hand vehicle worth 300,000. So I would like to put that vehicle in the business. So the business will now have a vehicle of 300,000. In concept, I can no longer use the vehicle of 300,000. So that vehicle is no longer mine. That vehicle is already owned by the business because I have invested it. Okay. So in this case, class, okay, the business has 800,000 of assets, and that 800,000 of assets was funded by my capital. Okay. So our accounting equation is that we have 800,000 assets and we have an equity of 800,000. Well, I thought that the 500,000 cash of the business is not enough because I need to buy the purifying equipment. So what I did is I secured a loan of 200,000 from the bank. So in this case, the 200,000, well, I secured because it's not me personally who secured the loan, but it will be the business, okay? But I just represent the business as the owner. So the business will receive 200,000 cash, okay, from the loan. So in this case, the business will now have 1 million asset, okay? 700,000 cash and 300,000 vehicle. Okay, so the business accounting equation will be assets of 1 million and liabilities of 200,000 plus the equity of 800,000, which is the capital of the owner. Okay, class? Okay, so class, in this accounting equation, the 100% asset, okay, the bank has a claim of 20% on that asset, which 20% is 200,000 over 1 million. So that's 20%. And the owner has a claim of 80%, 800,000 over 1 million. Okay, class? So that's the accounting equation of the business. Assets equals liabilities plus equity. Okay, let's continue the accounting equation of the business. So let us recall what we have learned so far. So assets equals liabilities plus equity. So class, let's summarize the accounting equation of the business. The business has cash of 700,000, correct? And has a vehicle of 300,000 for a total of 1 million. And we have discussed that the 1 million was funded by a loan of 200,000. So that loan is a payable of the business to the bank. Okay, liability. Okay, so liability is payable is a liability. Okay, so that's the loan payable of the business worth 200,000, and the capital of the owner is 800,000. Okay, so that is the accounting equation of the business. Okay. As discussed, the accounting equation presents how the assets were funded, how much from liabilities, and how much from the owner. Okay? Hence, there are two sides of the equation. And these two sides of the equation is expected to be balanced. Okay? So this should always be balanced. Okay? With this concept. Okay, class? That the assets um, will be determine how it was funded. And in this case, 200,000 from liabilities and 800,000 from equity. In accounting, the asset side, which is the left side, is debit, and liabilities and equity side, which is the right side, is credit. So class, it means that assets normal balance is debit and liabilities and equities normal balance is credit. So class, the normal balance means that any account, whether debit or credit, that is the balance that you would expect to have at the end of the accounting period. So in this case, class, we expect that assets to have a debit balance and liabilities and equity to have a credit balance. So we are expecting that all the assets at the end of the reporting period to have a debit balance and all the liabilities and equity at the end of the accounting period to have a credit balance. What if it happened that uh, the debit has a credit balance? The assets has a credit balance, or the liabilities or equity has a debit balance. So, what are we going to do? In that situation, it is called abnormal balance and it requires an investigation because there is something wrong. Okay? There is something wrong that you need to investigate the certain account. Suppose that cash, instead of debit, it has a credit balance. So there is something wrong. Cash could never have a credit balance, okay, technically, okay? So class, let us move on. Let us discuss other presentations of the accounting equation. Our basic accounting equation is asset equals liabilities plus equity. And in our illustration, we have 1 million of assets and 200,000 of liabilities and equity of 800,000. Okay, suppose that our equity is not given. How can we compute that? So we can compute that by doing a transposition. Transposition would mean that we are going to move one of the given, okay, on the other side of the equation. So in this case, we will move liabilities because that is given and this is unknown. So in this case, we will compute what is equity, how much is the equity. So our equation will be assets and then transpose liabilities on the left side. And in transposing, class, the rule is that we have to change the sign. This is positive, so it will become negative. So assets minus liabilities equals equity. You can also express that equity equals assets minus liabilities. You can interchange, okay, the presentation. So in this case, substitute the amount, assets of 1 million minus liabilities of 200,000. Then you have an equity of 800,000. So in this case, you know now that your equity is 800,000. Suppose that the liabilities is missing, it's not given. How will you calculate that? So same thing, do the transposition. And then, so in the transposition, instead of transposing liabilities, because that's not given, so you cannot transpose that. So what is given is the equity. So assets minus equity equals liabilities. So doing the substitution of the amount, 1 million minus 800,000 will give you 200,000. So now we know that our liability is 200,000. So in this illustration class, there are three presentations of the accounting equation. The original one, which is assets equals liabilities plus equity. And this two, assets minus liabilities equals equity. And this assets minus equity equals liabilities. You can interchange it. Equity is equal to assets minus liabilities, or liabilities is equal to assets minus equity. Okay, class, these three presentations are all correct. Okay, let's have now, let us discuss the balancing of the accounting equation. And in this, we will just do an illustration. We will fill up the blank with the correct amount. Get your calculator, class. Get your calculator. Okay, the first one, let us take a look first. Let us recall our equation, okay? This is what we have studied. So the first one is that assets is blank, okay, and our liabilities is 50,000 and our equity is 140,000. How much is your assets? Very easy, class, right? It's 190,000. So the second one, we have 400,000 of assets, and then our liabilities is 280,000. How much is our equity? Okay, class, compute. Okay, you are right. It's 120,000. Okay, on the third thing is that we have 500,000 of assets and our liabilities is missing, and we have 1/5 of equity. How much is our liabilities? In this case, class, okay, we have an equity of 1/5. The whole is 5/5. So in this case, the portion for liabilities is 4/5. Okay? However, this is not the correct answer because what we are required is fill up the blank with the correct amount. So we have to get the amount. How can we do that? So what we are going to do is 500,000 divided by the denominator, which is 5, then multiply by the numerator. So in this case, 500,000 divided by 5 is 100,000 times 4 is 400,000. So we can now determine how much is the equity. 500,000 minus 400,000 will give you 100,000, or 1/5 of 500,000. Okay? Let's continue. We have 700,000 of assets and we have 30% of liabilities. So if you have 30% here, then your equity is 70%. So in this case, you have to substitute with the amount, or get the amount, compute the amount to determine the corresponding amounts. Okay? 30% of 700,000, that's 210, and 70% of 700,000 is 490,000. So that completes our accounting equation. And number 5, if you have 1.5 million and your liabilities is 6/6, then how much is your equity? So in this case, 6/6 is already the full amount. So in this case, it has to be 1.5 million, so your equity is 0. Okay? Last, you have 2,450,000 assets, and then your liabilities is blank, and your equity is negative of 150,000. Okay, class? So how are you going to compute this? So if this is negative, class, and if you are going to determine liabilities, so what you have to do is do the transposition. Okay? You have to transpose this, negative 150. So this is positive and this is negative. So positive times negative will still give you negative. So when you are going to do the transposition, this 150,000 will become positive. So in this case, transpose 150,000 on the left side, so it is positive. So 2,450,000 plus now 150,000 because it becomes positive. So that will give you 2,450,000. 600,000 for your liabilities. Okay? So you will know that our equation is balanced. Okay, class? Any question? Remember, class, the only stupid question is the one that goes unasked. Please send your questions to the general page of MS Teams. Okay, class? Stay safe, stay healthy, stay at home.